Why is it actually that you buy the dip? And a few days later, the market continues to plummet, and other traders, they seemingly hit the exact bear market low and buy more right there. Is that a coincidence? No, absolutely not. The secret lies here in the Fibonacci, but not in just any Fibonacci level, but in a very, very specific area that 90% of people use completely wrong. In this video, I'll show you exactly how my spot rebuy trading strategy works so that you no longer just buy more on luck, but have a clear structure. And additionally, I'll show you how you can push your entry price further down with my DCA down without the risk of missing the bottom completely. If you're new to the channel, please feel free to leave a subscription. We are live here on YouTube every day, going through the markets together, looking at different trading strategies, and of course, entering some live trades as well. So I'm definitely looking forward to seeing you in the next live stream too. Please feel free to leave a like at the beginning of the video too. That means feel free to scroll down once, leave a like. Also, feel free to write in the comments which other trading strategy you would like to have. And then I would say, let's take a look at the whole strategy in the chart. Basically, the market moves in cycles. That means we have a bull run, we have a bear market, we have an accumulation phase, and we have a new bull run. Our goal is, of course, to usually always buy in the bear market with the spot portfolio as you get the best entries in the bear market. It's also not about getting the perfect exit. We don't want to worry about that at all in this trading strategy. I'll be happy to record another video for that, or you can also find a complete bootcamp all about trading on our Discord channel. So if you're interested in learning about trading, definitely feel free to check that out. There you'll find a complete bootcamp from A to Z, how trading works, what you need to watch out for, what to consider regarding risk management, how to do chart analysis correctly, and of course, very importantly, various trading strategies for you. So feel free to check that out. You can find the link in the video description. You can start the trading bootcamp there completely free of charge right away. But now we're going to talk about our spot strategy here. And it's about hitting the bear market low as much as possible in the bear market, ideally, to build a position here in the wonderful bear market or perfectly build the spot portfolio. How exactly you hit the bear market low, or how you can also draw it for yourself so that you don't miss it in future bear markets either. I'll definitely show you in the course of the video. First of all, we're going to look at the Bitcoin chart here. That means we'll first look at the whole thing in the daily chart, or you can also look at it in the weekly chart. In any case, it's important that we really zoom out completely. I want to make the example clear using the last bear market and also the current bear market, because if we're honest, we've been in a bear market here for a long time. We had seen the top at almost 69,000 US dollars and are now on our way into the bear market or are now in the bear market. Here, of course, the big question, when is the bear market low reached? And when do I also start buying more of my spot position? If you want to know exactly when I buy more spot, feel free to join our Discord channel. I have a section there for my spot purchases, and there I share every single spot order that I set as a limit order, and of course, those I've already bought more of. Completely transparent, so you can easily adopt my spot purchases for your own portfolio. How do we find out now where the bear market low is or where the areas are where we can buy more? And for that, we need the Fibonacci level and, of course, our Bitcoin chart. I'm going to go into the last bear market for this. The last bear market, that was here at nearly 16,000 US dollars. That was in the year 2022 in November. But we're going back one more bear market in the year 2019 to show you now just how accurately this strategy actually works. And for that, we're now going into the replay section. Very important, you need the Bitcoin against the US dollar index chart so you can zoom all the way down or see the last bear markets. Because not every exchange captured the very first move when Bitcoin was first traded. Therefore, it's definitely very important that you use the index chart. Then we'll take the Fibonacci level and start in the bear market from the bear market low. That was here, for example. Wait a second, let me just go to the replay here. Start new, we're going to clear all of this away. Namely, we saw the highest point of the bull run from the last bull run there during the previous cycle. That means we're cutting away everything that's in the future. So we only see what happened in the past and want to apply our Fibonacci level there. That means we've reached the bull run top. We can also draw it in the current market right away so you can see exactly where you might be able to buy more of your position in the next bear market. We apply the Fibonacci level, very importantly, from the bear market low. That's down here. It was at nearly 3,000 US dollars. Think about it. Bitcoin at 3,000 US dollars, that was definitely quite a while ago. We set the bear market low there. And then we go exactly to the all-time high where we saw the all-time high in the last bull run. You see it here, then we've drawn the Fibonacci level. Very important. I'll also open this in the settings. You need the following settings. The 0.5 level, the 0.618 level, the 0.786 level. And now I'll show you exactly how this strategy works. where you start building up your position in the bear market. If you don't know exactly what Fibonacci is in detail, or rather what Fibonacci does, don't worry, we have a complete trading bootcamp here on the channel. I'll pin the video for you at the very end, or rather, you can find it up here or also down in the video description. We have a complete bootcamp for you there, where I also explain in detail how Fibonacci, where I explain to you in detail how the Fibonacci level works. For us, two areas are very important now, or rather, actually, there are three areas. We start with the DCA as soon as we've reached the zero point 0.5 level. That means as soon as the price hits the zero point 0.5 level, we'll set up an initial position in the market. I'll also explain to you later how my DCA down strategy works in detail. But the zero point 0.5 level is the very first level for us where we start to set the first buyback areas. I always buy back using various limit orders. That means I place several orders into the market. This goes all the way down to the 0.786 level. I do the whole thing in different stages. This means I go down step by step in several increments, for example, depending on how much capital you have available. These could be $5,000 steps, for instance, they could be $1,000 steps, or they could be $2,000 steps, depending on how much capital you have available. We'll also go through the whole thing with a practical example so that you can apply it for yourself right away. I make all my spot purchases here on Bybit. Through Bybit, you even have the chance to get 25 US dollars completely for free. That is simply by creating an account. You can find the link for that in the video description. Depending on when you watch this video, we might also have one promotion or another running. Currently, there's a promotion where the whole thing is doubled. That means you don't just get 25 US dollars as a gift, but you even get 50 US dollars gifted to you. And 20 US dollars of that will be in Bitcoin. So, especially in the current phase where the market is really moving down a bit, or rather weakening, it definitely makes sense to start accumulating some Bitcoins here. So, feel free to check that out. Link for that is in the video description. Of course, the very first thing we need is an account on the exchange. That means click down there once, enter your email address, and enter a password. And then once you're logged into Bybit, you go to the section at the top, trade, then spot. And of course, we want to buy more Bitcoins. It's very important to say that this strategy also works for various altcoins. But I'm focusing, or rather, we want to focus today's video on Bitcoin buybacks first. We'll also go into the 1-day chart here, or you can go into the weekly chart depending on how you feel. And you can see here, I've even drawn in some areas where I'd like to buy back various positions. I'll delete that completely because we want to work through it together. The very first thing we do, of course, is we have to set a budget. That means the first thing you do is set a budget for how many US dollars you want to invest in the market in total. Very important here, I always buy back in stages. That means I don't go all in with one position, having, say, 10,000 US dollars available and wanting to buy back exactly 10,000 US dollars right now. No, we split this position up. And how do we split the position? We've already drawn our Fibonacci level. We're now dividing these areas into sub areas. That means we have a start zone at the 0.5 level. That means this is our starting area where we begin DCA, and we have an end area where we stop DCA. That means where we don't buy back anymore. Of course, you can always extend the DCA zone downwards. If you notice that we're falling further down, for example, and you might have a bit more capital, then you can, of course, extend the DCA zone. But I want to work with fixed DCA zones with you first. That means we have a start zone and an end zone. Once with marked in red, then of course we still have intermediate zones where we will always buy more. And that is now, as I said, dependent on how the capital is set up. That means you have, for example, 10,000 euros available. Then I would divide the whole thing into tenths. So that means doing the whole thing step by step downwards, always every 10, or splitting the position so that 10% down, then the positions are bought more. That means we then buy, for example, after we have fallen downwards, after another 10% in here, for example. Let's do it once here on yellow, not on yellow, on white, so that you can see the difference here. That means then we would now just take all further steps downwards. We have, for example, 10 positions that we throw into the market. That means we want to buy more 10 times, 10% each time, and set up the areas so that it is exactly the same distance as a rule. It should, of course, then be the case that you perhaps buy more at fixed price targets, for example. But you also have the possibility to buy more at odd price targets depending on how you feel. And these price targets, you see them here now at the bottom on the right side, for example, at 32,400 US dollars, we buy more. At 29,000 US dollars, we buy more. Then at 26,000, at 23,000, at 22,000, at 20,000, and at 18,000. And these areas, you then, of course, enter them in your limit orders. That means you start right here at the top setting limit orders. The next limit order would be, for example, here in this case, 35,700 US dollars. That means you type in 35,700 US dollars is your limit order. Select once. How much USDT or how much Bitcoin you want to buy. We have now said we have a 10,000 euro total portfolio available. We want to spread the whole thing into 10 positions. That means 10 positions would then be, in the end, 1,000 US dollars. That means we would now put in 1,000 US dollars as a limit order, and you do that as far as step by step downwards so that you always have an equal order downwards. Optionally, you of course also have the possibility to increase your position if it goes further down. For example, you say, okay, I start up here, for example, not with 10%, but with 5%. 5% for the second order, 5% for the third order, 5% for the fourth order. At the fifth order, we go in with 10%. At the next order, again with 10%. At the next order, with 15%. And at the next order, again with 15%. And at the last order, with what is simply left over. That means then you do DCA down. And of course, then have the advantage that if it goes further down, you even push your entry price further down because you are always buying more step by step. And that is the good thing, that even if you don't catch the bottom perfectly, you are still positioned in the market. That means then perhaps one or two limit orders will not be picked up. We can take a look at the whole thing, how it then looked in detail. You see here now, we just let the price continue to run, so to speak, into the future. And then you see now the very first limit order would be triggered. We buy more at 36,900 US dollars. The chart continues. We get a small recovery, and that means you are now, for example, even well in profit with your spot position. And then we see, okay, the market stays in that area, stays remarkably very well. You're sitting on a great profit with your position, and then a massive sell off happens, basically confirming that the bear market is here. And what happens? The market crashes right through. And now, because you've already placed your limit orders in the market, you've had the perfect opportunity to keep buying into your positions. And you can see quite clearly here that the market, for instance, continued to drop even further. And you simply stuck to your plan step by step. And as a result, you've continued to build up your Bitcoins, your altcoins, or your overall asset portfolio. You can also see here that the market is sticking exactly to this range in this case. And specifically the Fibonacci level we set up, it's respecting these zones incredibly well. For example, you can see here that you've perfectly caught the bottom so far. If we fast forward a bit, we can see that the bear market, or rather the bear market low, was eventually reached. And so you hit the bear market low exactly. It dropped a bit further, which means the Fibonacci level isn't always perfectly accurate. You shouldn't blindly rely on it to always show you the exact bottom, but even if you miss the bottom by, say, a few hundred US dollars, it's still a great opportunity for you to catch the bottom here. So you can see it quite clearly. Let's let the chart run a bit longer. With this Fibonacci strategy, you would have hit the bottom exactly. And that's exactly what every investor or every trader wants, to set the perfect orders at the bear market low. But even if it doesn't hit the bear market and turns around sooner, you're still well positioned so that when the bull run starts again, you can naturally let your spot portfolio work for you or even start taking profits again. If you'd like a general video on how I find the perfect exit strategy, what I look for, and especially where you should naturally close your positions to walk away from the bear market with a profit, let me know in the comments. Feel free to comment if you want a specific exit strategy, then I'd be more than happy to make a video about it. Now let's take a look at all of this in the current bear market. Because we're currently in a bear market phase, you can see here that we really hit the bottom perfectly with this strategy. Let's clear this out, go to remove drawings, and see how I would place my next orders at this point in time, for example. If you've been paying attention, it's about setting the bear market low on the Fibonacci level as well as the bull run top. Then we see our DCA range starts at the zero point 0.5 level and goes all the way down to 39,000 US dollars. That would be the 0.768 level. And in these areas, I'll draw it in for us again. We'll start with our DCA down. Same scenario as in the last bear market. Here too, we have a zone and then we subdivide this zone into subzones and buy more step by step. That's exactly what I've already done, or what I do on a daily basis. Well, not daily, but at least whenever we test these areas, I'll naturally increase my Bitcoin position accordingly. I share that transparently on Discord. That means if you're not on the Discord server yet, the link can be found in the video description. Feel free to join, it's completely free, and you'll also get a full trading bootcamp where everything from A to Z is explained, how trading works and what you need to watch out for, and most importantly, how to find your perfect trading strategy. I wish you much success in implementing this strategy. Also make sure to claim your welcome bonus. The link to Bybit is down in the video description. You can get up to 5,300 US dollars as a deposit bonus here, or you can also get 25 US dollars as a one-time gift from Bybit. Be sure to check that out. Start building your trading portfolio, or rather building your spot portfolio. And if you're in the mood for more trading videos now, feel free to watch this video here. Then I'll see you in the next live stream or in the next video.